Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So another day of wonderfulness, or not. Depends on which side of the market you're trading. You know, recently we've had very big days, very wide ranges, very loose wide ranges, and very different from day to day, which is something we're kind of getting used to. So, you know, if we have one day up, one day down, one day up, one day down, you probably have to be on alert that that could continue and, you know, figure out ways to figure out whether or not it changes. You know, that's what technical analysis does for you. It shows you whether or not there is something different, so you could base your trades and your adjustment process off of it. Yesterday, you looked in the newspapers and it was, oh, the best day in 2 years. Okay, and it was a nice, potent up day. The market responded to the Fed, you know, where some people were scratching their head like, okay, market's up because they basically said that everywhere around the world is a mess. So markets go higher. You know, I guess can't happen like that forever. Sometimes the real economy does hit the stock market, especially when QE is winding down. But anyway, so what do you do as a trader? You know, big day yesterday, you make some money long. You probably got squeezed out of your shorts if you happen to be short. And so what I did is I took home some extra longs after the red dog reversal. I try and take, you know, a third. Apple looked good, Twitter looked good, BABA looked good, and I was like, you know, let me have a little bank exposure. I'll go with Bank of America. But also take a spider, you know, hedge home, because who knows if we continue. So after yesterday, you know, you come in today, you look at the chart, you'll see that, you know, you had a decent looking potential situation, right? You had a double bottom on the 150-day and a super duper close right back at resistance. Resistance that failed the first time there, but this time look at the potency of it. Okay, so for me, I'm like, all right, maybe today would be great if we get an inside day, if we hold the top third of the range. And if we don't, you know what? All bets are off, no commitment. And then this is what happened today. My goodness, look at the size of that bar. Just negated, you know, all of yesterday, which is dangerous, especially if you don't have a plan and you don't have stops and you're not properly prepared. So first things first, I just want to show you what we did in my Twitter feed. I showed, you know, Fibonacci retracements just to show some kind of commitment and also levels that probably should hold if it's going to be any good. So in my head, I was like, all right, you know, commitment happens if we hold somewhere around 196, okay, which is really where we were. This is actually 195.79. That's where we were already. We were there like realistically at the open. So that's where I covered a little of my spiders, because I said, okay, let me cover a little of my spiders, see if my stocks hold up. And then the next level was somewhere in between, you know, this 195.19. I actually had 195.45. I didn't have it exactly like this. But so it even gave a little bit more benefit of the doubt. So what happens? Once you take out the 0.38 retracement or even the 0.50, you say, wow, this bar no longer has the power to control the next day. It could be just like the same as we've been seeing. So that's when you had to switch gears. Okay. In the same time, remember we talked about the XLE. Could there be a bottom? Was this enough? Was this a nice bottom tail to break the descending trend line? You know, put the basic studies, put the volume in, and you know, said, look at this capitulation type volume. For this to be any good, okay, I would think it would have to hold somewhere around 87. So I gave it 87. So I was watching out of the corner of my eye. I didn't own it. I was thinking about maybe it was down 80 cents buying it. And, you know, P.S., it just took out yesterday on the same amount of volume. Wow, that is dangerous. But you go to your 5-minute chart, okay, and you will see that, you know, it basically came to this level where, you know, here what you did is you write down this is where it broke out from in the afternoon. So if this was any good to get some continuation, it probably would have held 87 or at least 86.50. And look at the time here. It's 10 o'clock. By 10 o'clock, it already gave back more than half of yesterday. So it took the entire day to muster up an oversold bounce on heavy volume, creating a hammer bottom. It took 20 to 30 minutes to engulf half of it, or maybe even more than half of it. So right there, you're like, wow, you know, this might be the same thing where we just go back and forth each day. I think the OHs were even worse. The OHs, you know, gap down. So this was, you know, your afternoon pull-in, okay, which was Bible yesterday, sliced through, okay, and then, right there you were like, okay, there's probably not much commitment to this, and if you waited a little bit more, maybe you gave it to here. So this also, didn't find the friend, and now engulfed all of yesterday. So, if it doesn't hold a top third or half, you get out of the way, especially in a broken sector below all moving averages. The Russell, same thing. Okay, could have been, an outside day, for a bounce back to resistance, maybe even to break up above resistance to test higher moving averages, but it wasn't. Okay, so I know Sperling was all over this and trying to play a bounce, but you know what? You had you had levels you could have got out at. Okay, this was yesterday. Okay, strong close. So when it came in and made its first low here, okay, which was between, actually this held up a little bit longer, between 10 o'clock, you had your bounce. Right here at 11 o'clock, when it broke 107.50, if you were trying to play, buy a pull-in for a continuation to yesterday's move, that was your spot. You had to say, I'm out of here. And if you sold 107.50, probably a heck of a lot better than puking it out towards the end of the day at 106. So again, not showing as if anything's too healthy here. Okay, still continuing to the downside. You go to your bigger pattern here, which we've put on Twitter many times, talking about if 109.5 broke, get out of the way. And now it's been grinding its way lower, and you have some support here, and then some more, really huge support closer to 100. So before I get into stocks, I want to go really right back to the spiders and show a little bit of my concern and why. Okay, first of all, let me just remove the volume again so you could see it. And, look at the trend, okay? Remember we say how, you have active trends, you have intermediate trends, and you have macro trends. Well, here is a trend that started from the beginning of 2014, okay, which we broke below here. So we are now on the right side of, the trend, which is never a good sign. Usually, in the past few years, we've broken below the trend line and then pop back above. It was a, more of a trap to trap shorts and get, longs out. And this time we've been on the right side of it for quite some time. So, it says to me that if tomorrow we break below 1925 or 192.30, we could see this real quick. This is 190.50, and then you finally have your 200-day down here at 190.16. So, you got to be careful here. Right side of the trend line, still only about 4% off the highs, and stocks have been obliterated in so many sectors. Europe's a mess, China's slowing. There's, lots of stuff like that. Okay, so go to the weekly, okay, because we are trying to draw trends just to see what could be tested. So this was one trend, okay, if you draw it. That doesn't get tested all the way down to 180, and this is the trend that's been intact since the red dog reversal back here. I remember that one in August, somewhere in 2011. And then, you have a different trend here, this one, okay, from before in 2012, which, I think this one's kind of broken too. Let's see, are we on the right side of that trend? Yeah, we're on the right side of that trend too. So here we are. If you look at the weekly, if we closed here tomorrow, we closed with a weekly red candle on the right side of the trend line, and we broke the 21-day moving average that we've been trailing and following for a long time. So that's a condition change. That's something to take note, that you better not just be buying dips, and you better be, selling rallies and trying to, be a little bit more careful. So with that said, here is that support, and here's the moving average that could be moving up. There are already some bears already talking about how this is what's going to happen. Well, we'll see. Left shoulder, head. We're going to come into here within the next few sessions, bounce off, and then create a right shoulder here, and then get this move, from here all the way to here for next year. So people are already saying that in the next week, we're going to hit this, bounce off it, rally back. The fourth quarter rally might take us up a little bit, but not back to new highs, and then we're going to roll over, and then 2015 is going to be a mess, and we're going to hit here. That's a lot of trading between now and then. But anyway, what we know now is that you do have us on the right side of this trend. As of now, we are below the 21-day on the weekly, not just the daily. I say, look at this mess. When you break below the 8 and 21-day on the what's it called, on the daily, that's when I tend to get from portfolio to tactical, and that happened here in 1990. Now it's happening on the weekly. So let's see something that's not a mess. The SPX, I haven't been writing all over that. This too, look at that, closing on the dead lows. So someone said to me today that like if someone put, something to your head and said, you have to be in a position, for tomorrow, if you had to be short or long 10,000 spiders, what would you rather be going into tomorrow? I'd say short 10,000 spiders, not long, whatever that means to you. But I don't have a to my head, and I could just go out flat. I made money today. I'm very happy about it. I followed my rules. I stopped out of some longs, even though they acted sort of well, and I had hedges on, and I let it happen. And that's what I'm going to be doing. I'm going to be a little risk averse, taking trades, and better be safe. And cash also is a position. Because if we opened up 150 points tomorrow in the Dow and I was short, I'd be a lot more pissed than happy if we were down 150 points. If we're down 150 points, I'll probably test that level near the 200-day. And if we're flattish, I might even then tomorrow be able to short. If you go back to this, I think a great setup would be tomorrow. I don't even know why I'm talking about it because it's a long way away. We're up 5 handles, okay, and then you get a short through this 1925. You get a quick flash down. You cover into 1904. Then doesn't hold, people start to accelerate, and then we'd be a buyer here, somewhere a little bit closer to 1880. But we'll see. That'd be a perfect world. And we're never in a perfect world. So with that said, the stocks that we've been looking at that there's a lot of broken names out there. Like look, this Google tried to do a red dog reversal yesterday. It's now below the moving averages, closed on the lows. Amazon, look at that. This still might even be some room, for this thing to break below here. This is in high beta tech. Netflix is hanging on by a thread. I still think it's okay. One red day, as long as it stays above this, I guess this is go-to status above 460, but who knows. Tesla has its big announcement, probably now as I'm talking. Couldn't break above, a little bit of a red dog reversal today on support. We'll see what happens here. 254 is pretty big, 252 is pretty big. On the stronger side, you had Apple. That's what I came in long, and did a bit of a doji into the trend line. Once things started to break, I pretty much got out of it, even though it looked fine. I came in long. I bought more through like 101.80, and then I sold some into the 102s, and then once it broke back below this little pivot here of 101.50, what was that, 101.54, I just kind of got out because I got flat because the market was coming in hard. So now we'll see what happens in the next few sessions. If it could hold above this, maybe next time it tries to go, is up a little bit with the market getting crushed. So we'll see. If there was one stock that I had to be long overnight, and you never have to be, it would probably be Apple. In the newspaper, you'll have icons saying it should be $200. So maybe if the futures are up, it's going to be up, and if the futures are down, it's down. It probably goes green. So if you're in Apple, you have probably a different time frame. Also, Twitter was real strong. I actually sold that in the green. Tried to trade above yesterday's high of 55.66 or whatever that is. Went as high as almost 56 and came back in. When it came back below, I got out of it, and I'm like, you know what, the market's falling apart. Let me just be prudent, and it still looks fine. So this will be a candidate tomorrow. Facebook, which we said hasn't been as strong, okay, where Facebook, look at the high here, okay, on Facebook, and Twitter did not. I mean, look, Facebook didn't make a new high when Twitter was at highs, and it reversed. I tried being longer when it went green, and I was just like, you know what, it's not worth the time. And now you got to see how it handles this moving average. It's come a long way, this thing, and it's been a great long, a great trade, and it's on a big perch up there. And if we happen to come in more, this could be a little vulnerable, but we shall see. As of right now, it's still very strong. Remember this cup and handle? This was look at that. That's why we love new issues, because new issues get in accumulation mode, and then if their growth is there, boom. Talking about new issues, let's see what GPRO did today. GPRO, inside day, another Citron report saying it's going to be $20. At this point, it's still holding. Again, you don't want to just be in things when the market's correcting, because usually, tide takes everything in the same direction. It's holding the 8-day for now. I guess if you were looking to short this, if it broke below 87, perhaps, maybe test a 21-day for the first time. If it hangs in there and the market bounces above this 91, 92, we'll look at it. MBLY tried being strong. Same time the market kind of failed. This failed. If you're trading something for momentum, you get out when momentum leaves. It tried to break above this 57.39. It was toying with 58, and then once the market fell apart, it came back below. That could have been your out. Now it's back on the 8-day, but it's been holding the 21-day. So we'll see if you can get a buy here on the 21-day at some point. Outside day here. So if you're a short active trader or short term, you probably get out of it. So we'll see what's next. BABA actually looked like it was going to go today, so it's just kind of, it's not really funny, but I think I was buying a lot at 90. I'm like buying it. Went to 90.30, and then Lightspeed went down, and all of a sudden, came back on. It was at 89.5. I'm like, my hate with a tiny bit of love relationship with BABA continues. Thank goodness. I guess I don't know. There's no thank goodness there. It just didn't go. If the market wasn't down 300 points, could it have started that move above the descending channel? Yes, but the market was down 300 points and it came back in, so we're going to have to wait. If it opens up above that tomorrow, I'll be upset. If it doesn't, or if it does, that's life. I'm going home risk averse, but it's on the radar again. At some point, I think it does go, and we'll see it, and we'll be back in it, and we'll make some moves. But as of right now, you go back to the chart of BABA, and it still looks fine. It's developing a nice lower area, just the market wasn't ready, and momentum guys aren't going to hold things when it looks as if this S&P could break below some key levels, because most things go down when that happens. I really think we could be a big buyer into here, but this has to give way first. We'll see. What else? Bank of America I had overnight, and thank goodness I got out of it quick. I guess the banks were up yesterday because people were scratching their head because rates aren't going to be going up, so why would the banks be up? But anyway, this was your red dog reversal. In my head, I'm like, if this is going to be any good, it's going to hold at least, this 1680. So I was trading other things at the corner of my eye. I think I bought more in the first 5 minutes, and then when it couldn't hold after 20 minutes, I hit it out, and thank goodness, because it went down to 1650, and I think I was done with it at 1690. Look at the 5-minute chart. You saw it leave the VTF, just so you know how you could salvage trades. This happened, let's see, I did in the, where did I get out of it? I got out of it in there, so I got out of it even quicker. Let's go to the 3-minute chart. In the 3-minute chart, I think I just wanted to reduce risk. It was in here, it had a big wide range move down. I bought more at 1693 or so, and then once it traded below 1690, I'm like, I'm out of it, because the banks just felt weak, and look at this move lower. So we're going to have to revisit this, because this, potent bar engulfed this whole range, and there's really nothing, support-wise all the way down to here. Okay, same thing goes for, look at Goldman Sachs now. Engulfed this whole thing. It's below the 21-day. It's right at this pivot, and then, you might as well wait to the 50-day and see what happens there. If rates aren't rising, banks can't make much money, and then trading volumes are down, blah, blah, blah. What else? Really, we've been saying for a while, and I'm not going to toot our horn or toot my horn, but I've been saying it's a lot easier to get in trouble lately in this market versus making money. That cash is a position if you're not seeing it. We've been using the pivots on the edges of the ranges to get some nice red dog reversals for good, good cash flow for the day, but you just have to, know when you want to get out. I know yesterday, I got out of stuff a little too early and held some stuff, and today I look back, I'm like, wow, taking trades is good. On the short side, get short at the top end of the range, you cover a little too early, and then you're like, wow, look how much you didn't make because you cover early. But that's part of my thing. I take trades usually early, and I'm safe, and same way on the short side. But today, if you came in thinking this could be different, which it could have, and I was actually thinking that, what, let's digest in the upper third for a day or so. Some key stocks are acting well. Maybe it's back to game on, and I was wrong, and I said I let the market tell me that I was wrong, and I got out, and I wound up having still a green day when the market had a serious red day. And if you were short today, and God bless, and you've leaned on it all day, and today was a great day, and you're like, red dog, you should be shorting more. What's the matter with you? Okay, you're probably right. A lot of guys were short also yesterday into yesterday, and then probably got their tushies handed to them in that squeeze. And all of a sudden maybe capitulated at the end of the day and was probably sitting like, oh my God, I was short yesterday and I didn't have stops, and I went all day and I couldn't handle it and I blew my account out. So shorts and longs are both getting blown out when you have this back-to-back day randomness and erratic nature, especially the size and the wideness of it. So just do a little less, make some money, put it together, preserve your cash capital and preserve your mental capital. You know, there's nothing, you know, there's a lot of guys out there that are getting battered and bruised and doing way too much. And then when things get a little bit more clarity and a great trade develops, they're going to be a shell of themselves and they're not going to be able to pull the trigger. And then all of a sudden that's going to wind up, you know, crushing their mentality that that's their trade and they didn't do it because they did it the day before or a few days before. And that's not good either. So pull yourself back. Get your mental head in order. Be prepared. Volatility is good if you embrace it and you're not trapped in it. And the next few sessions are going to be interesting. And again, you don't have to trade. You cash as a position. You could take your longs early. You could take your shorts early. You could be calculated. You could honor stops. And there are ways to maneuver with this, you know, with the action that we're seeing. Tomorrow I'm in Short Hills. I'll be on the radio. My morning note will also be a little bit smaller. If you use Redler All Access and you get my note every single day that goes out by 8:45, I have all of these levels listed. What you should do is you should print out my note, put it next to your keyboard, and say, oh, Red Dog said if the spiders break, you know, 195.45, chances are they can go back to the low end of the range. Maybe I shouldn't be so bullish, or maybe I should flip short. And the same goes for all of the other ETFs that I put the levels on and some of my thoughts. And you know, I put it together every single day. It takes me like an hour in the morning. I take the futures into consideration. I take what happened overnight into consideration. And then, you know, I use the arsenal of 30 stocks that we look at that move pretty fast that at least, you know, I put my plan on paper and that plan could be, you know, part of your plan or at least help you be a little prepared. You know, you go to t3live.com, the front of the page, and check out Redler All Access. It's something that, I take my pride in besides all the other products that we have on the VTF, where you could see actually entries and exits and you could see what we're saying and whatever. I'm trying not to pitch out, I'm just blabbing. Thursday, Thirsty Thursday. Go have some drinks and relax, and we'll see what happens tomorrow. Have a good night.